I was wrong. And let's not only say I was wrong, let's be truthful. I was spectacularly wrong. I was wrong on every front what would happen yesterday at the Fed meeting. We are going to talk about that in some excruciating detail because I think the subtleties are important. I think there have been opportunities missed. But most importantly, I have spent the last 12 hours asking myself how I could be so spectacularly wrong about what transpired yesterday. And unfortunately, I may have uncovered something that bears discussion. In addition to that, we will talk about Q2 GDP. We will talk about weekly unemployment claims. We will get into earnings. But we've got to talk about the Fed day and why I am wearing the swing and a miss shirt. First and foremost, I would be wearing this shirt if the Fed raised and I got nothing else wrong, right? I kind of warned that I expected this to come. But I'm actually wearing this shirt not because of that, but because of what Jerome Powell did in front of the microphone. Let me set up my logic, how I would have played it, and then we could talk about what Jerome Powell did. So, okay, they give us a quarter point. Okay, they give a press release. Ho-hum, not much changed. And then Jerome Powell gets in front of the microphone. Remember, point one, there is not a Fed rate meeting until September. In August, they do their yearly symposium called Jackson Hole. So Jerome Powell is sitting in front of a microphone knowing that their next rate decision is out 8-10 weeks. Okay? He's sitting in front of the mic. He just gave a quarter point. My opinion, again, this is my logic going in and why I was so wrong. Just so wrong. You get in front of the microphone. You know the underlying data is starting to get soft. It's starting to weaken. You're starting to see signal through the noise that, you know what, these 500 basis points in rate hikes, now 525 basis points in rate hikes, is starting to impact a lot. You're starting to see potentially banking crisis 2.0, a la Bank of California buying, I don't know, that other bank. You see all of that. However, you're the guy. You're the transitory guy. You want to be Powell Volcker. You're sitting in front of that microphone. You have an opportunity to one more time kick the market in the nuts and say, you're not listening to me. We are going to go higher than you like. We are going to stay there longer than you like. You're not listening. That is what he should have done. And then he could have ended with, you know what, we'll be data dependent, meeting by meeting, all of that nonsense. What he does with that strategy is he provides air cover. If the data comes in hot or strong the next 8 to 10 weeks, he could be like, see, I told you. If it comes in soft, like we're starting to see clear as day, he could say, you know what? That extra long break, we're going to pause one more time. But don't worry, we are staying vigilant. That would have been a strategy, and I think the market would not have liked it. He should have been a pterodactyl, a hawk, Jackson Hole, Paul Volcker, whatever your analogy is. He clearly wasn't. In my opinion, instead of being the hawk, he was like Tweety Bird, right? That little yellow bird from whatever that Tom and Jerry cartoon, like the little bird. He wasn't even a dove. He was Tweety Bird. And now what we have is we have a Fed president basically saying, yeah, it's a coin flip. We're starting to see this. The labor market's kind of tight. But, he basically was soft. And how do I know he was soft? This is the telltale sign. Yesterday, The 10-year Treasury went down when the Fed raised rates. That is a telltale sign. Now that he has come out and been soft or weak, he is already feeling the heat. Do you know what data came out today? Again, he should have strategically played the game like I am Paul Volcker 2.0. I'm not messing around. Wall Street, you're out over your skis, blah, blah. He should have. He didn't. Today, Q2 GDP. Q2 GDP was estimated to be 2%. It came in at 2.4%. The economy is stronger. Not to be outdone, our weekly, right? This is weekly data. Our weekly unemployment claims down again, right? We had those 3 or 4 weeks at 264, 268. We're now down to 221. They're down 7,000 from last week. Expectations were for 235, so down 14,000 from expectations. Now, rates are going to shoot up because, again, they're down yesterday, they're up today because the economy is too strong. I believe he made a strategic and it's a tactical error, and it was so obvious. I have been racking my brains to why. Because I don't think Jerome Powell is an idiot. I think he's very, very smart. I believe there is something in the background that he's like, I need to cool it. I need to take the hammer, I need to take my foot off the gas. I don't want to put it on the brake, but I got to get it off the gas. So I think he was committed to raising rates yesterday, right? 99.7% of folks expected it. I was one of the idiots that said it wouldn't happen. C shirt right here. But what could it be? I think what we might start to see as more regional banks report earnings is they are insolvent. One of the things we're seeing as rates go up, and if he would have been Paul Volcker 2.0, the 10-year Treasury would have gone up and the bank's balance sheets would have gotten worse. We are also starting to see more and more commercial deals simply not happen. Banks are refusing to lend on good deals because they have to raise cash. I think what Paul Volcker did, or not Paul Volcker, he wishes he was Paul Volcker. What Jerome Powell did yesterday is he's trying to buy time for the banks. This is complete speculations. It's the only logic I have to why he made such a tactical error. It's like giving up your queen in chess. Like if you're going to sacrifice your queen, there better be you better have a plan. It was a huge error, in my opinion. I'm wrong. Again, I freely admit it. I got yesterday's call wrong on every front. Every front. I wasn't even in the ballpark yesterday. So hopefully we've talked about that. But again, as the data gets stronger, I think Paul Volcker, wow, gosh, Paul Volcker on the brain. Jerome Powell is going to, again, have damage and egg on his face. Q2 GDP, weekly unemployment claims. Yeah, not good. So there you go. I think I should probably wear this shirt all day. I was that wrong. All right, let's talk about some stuff. Francis Donald, who is he? He is the chief worldwide economist for Manulife Investments. Essentially what he framed it as is a hawkish hold yesterday. I think that is not accurate, frankly. But that's what he said. He does highlight that he expects inflation to be sticky between 2 and 3%. Welcome to the party. You and I have been talking about inflation having 3 parts. We're in the hard part now. I do think shelter inflation rolls over in August, which we will see momentarily. But again, the real inflation fight is the next point, the next point and a half. That's where we are, and it's going to be a slow grind from here. And to be clear, I think there will be some up months. I think this CPI reading that happens in 2 or 3 weeks It could be up. Now, I'm not calling that, but I'm just saying mathematically, it might be up 1/10. Because I think last one was at like 3%. It could tick up to 3.1 given the base effect. I haven't looked in detail yet, but it's possible. Thomas Pettify, maybe? I'm not sure. Petfee? Peterfee? I think there's an R there, actually. I think I didn't put the R. I think there's an R there. Peterfee. He's the founder of Interactive Partners, or Interactive Brokers, excuse me, Interactive Brokers. He came out, I think it was on Bloomberg, just talking down the market. He expects a recession to hit, earnings to collapse, stocks to plunge, and the US dollar to falter. Man, does he have a rosy picture of the future. Again, these are things that we need to pay attention to. I think yesterday the Dow was up. That's 13 days in a row. It's funny how I saw some articles yesterday say Dow up 13 days in a row, first time since 1987. You know what, folks? We brought you that 3 or 4 days ago. And there's a chance today, folks, that it's up again and we set a record. If you don't know what happened in 1987, go look it up. I'm not saying that will happen. I'm just saying sometimes history rhymes, and you should at least pay attention. Let's talk about some earnings. We got McDonald's beat top line, beat bottom line, same store sales up. Meta or Facebook beat top line, beat bottom line, increased guidance. Chipotle missed on revenue. Right, we're seeing more and more companies miss on revenue but hit earnings. To me, as the old accountant, you can't fake revenue, but you can manage earnings. Digital sales at Chipotle were 38%, which I think is quite impressive. eBay missed top line, missed bottom line, and had very weak guidance. Sonovo Energy, solar company, missed top line, missed bottom line. Any more I have? Nope, that's it. So that's on earnings. ECB did raise rates today. Something about ECB. ECB raised 25 basis points to 3.75. Their inflation rate, 5.5. They are not yet restrictive. Right? Think about that. Inflation's 5.5. Cost risk-free rate of return is 3.75. You're not even restrictive yet. ECB has some work to do. The Fed, now 5.25, or 5.38, I guess technically. Inflation 3%. They are restrictive. They're hella restrictive today. Couple other things we'll talk about. Who's going to feel the pain? Who's going to feel the pain? So I think there's a couple of things going on today. I think if you are a small business, you are feeling the pain. If you are looking to get loans, if you are looking to grow, if you're looking for equipment loans, anything capital, it is ridiculously hard. Ridiculously hard. And I think a lot of small business loans today are over 10%. Small businesses are feeling it. Illiquid billionaires. Of course, we like to joke on this channel about billionaire Barry. Illiquid billionaires. I actually think there's plenty of billionaires that aren't billionaires today when you look at their balance sheet. If you truly valued their assets, they actually have a negative net worth. People who relied on financial engineering. There is an entire cohort involved in real estate, SPACs, that were just great financial engineers. When the risk-free rate of return is 0, financial engineering works. You borrow at 0, you earn 6. The spread is 6. You look like a genius. When the risk-free rate of return goes up to 5.5 and the cost of capital is 8, 9, or 10, you got to be a good operator. You have to be a good operator. Financial engineers, generally speaking, aren't good operators, and there's going to be a lot of pain felt. Commercial real estate. I had conversations with a couple people trying to buy commercial real estate yesterday, and they're saying it's ridiculously hard. Even for deals with 60% LTV, bought under market, strong operator, strong balance sheet, banks don't want to lend. They don't want to part with their cash. They need to build up the reserves. There might be something lurking out there, kind of banking crisis 2.0. It's like the only thing I could go back to why Jerome Powell made that tactical error. And now, yes, I may be conflating irrelated things, but I'm trying to figure out why he made such a, just a tactical error. And then, of course, zombie companies. Whether you are a unicorn valued over $1 billion, if you don't have product market fit and actually produce something of value, you're going to go bye-bye very, very quickly. And then lastly, folks, the number 19, I warned you. I think it was Sunday, I announced a free event. Remember, after my Thursday session at the Silicon Valley meetup, I wanted to address questions in the room like I always do. And the real questions in the room were, okay, great, Mike, congratulations on what you have. Could you rebuild what you have today if you started today? And as I have said now 3 or 4 times, of course not. What I went through for 20 years is a different set of circumstances than we will have the next 20 years. So let's not lie to each other. What I would build over the next 20 years would not look like what I have today. That said, this is also important. I would still build something meaningful that would better my financial future. I believe I would build something that would lead to financial freedom. I also believe I would probably build something smaller, right? And I'm going to take 500 people through that on Sunday, August 13th from 8 to 10 a.m. I'm using my Zoom account, which caps out at 500. We have 19 spots left. 19. I told you this would be full. So if you're watching this live, there's a chance you can still get in. If you're watching this on recording, I don't like your chances, but you can try. So if you watch my daily financial news from the last couple of days, you can find the link there. I will try to remember to put it here after I'm done with this live. But again, try. My intention is to release it to the wild because I think it's important. But if you want to be there, you want to ask questions, you want to be a part of this event, you've got to register. It's capped at 500. I'm not spending more of my money to make it bigger. 500 is very generous, I think, already. So again, folks, do that. If you want to come to this event prepared, like if you want to maximize the event, I would spend $47 and buy my buy box course or buy box event. I did a 2-hour deep dive. If you want to understand the vocabulary, the strategy, how 5 other students are rocking and rolling, buy that thing today, right? Get ahead, go through the 2 hours, watch it a couple of times because I'm going to have to race through 2 hours and give you my exact plan, and some of the vocabulary may trip you up. So buy that for 47 bucks. If you really want to join the party and do all of these things and actually leverage my strategy, you can get the $3.99 course, How to Get Started One Rental at a Time, and get $100 in free goodies like the buy box, like the mastermind, like the legends of real estate, whatever fits your fancy. But if you want to maximize it, do one of those 2 things. Buy the buy box or the $400 course so that you can move forward. I'm going to give you action steps. They are going to mirror what's in the course at some level. Are you interested? Are you obsessed? Are you interested or obsessed? You have to become obsessed. 20 minutes a day, 7 days a week, 20 some odd years. Alrighty, folks, have a wonderful day. We are, I didn't update that number, but we are under 1,500. If you want to become a part of the first 50,000 subs of One Rental at a Time, please do me a favor, subscribe today, ask your friends. As soon as we get to 50,000, we can start planning a Vegas party. Take care, have fun, bye.